Hey, my name's James Dawson. Welcome to my YouTube channel. Now, in this video, I'm going to give you my property predictions for 2023. Now, we're nearly there, a few weeks, and it will be 2023. Where has the time gone? Now, I want to ask you a favour before we jump into 2023 and ask you to join us on this property journey. Now, 2023 is going to be an absolute roller coaster for investors and an absolutely huge opportunity too. So, how can you help me? Well, I'm trying to get to 5,000 subscribers and I want you to make sure you're subscribed by smashing that subscribe button over there and hitting the bell notification. I also want to get 100,000 views on my channel. I'm getting 50,000 at the moment. How can you help me with that? Smash the like button, guys. That will really help us. So 2023 is around the corner and the property market has been a roller coaster since 2020. You see, 2020 and 2021, we had huge increases in property prices, which just defied the norm. It just didn't really make sense. Why did that happen? We were all locked in. And what it was that people had a lot of disposable income. You see, they were still getting paid. They were going on less holidays. And they wanted to get out of cities. And so places, I've got investments in Hastings, in Sussex. Those areas did very well. In fact, Hastings was in the top 5 locations for growth in 2021. So 2022 has been a little different, hasn't it? So we've got inflation now, and that's caused by a number of different things, primarily because the government has been printing so much money. But also, we've got an energy crisis, which is contributing to that as well, because everything uses energy. And so the inflation at the time of recording this is at 11.1%. Now, that's a problem. And that means things are really getting expensive and people are going to struggle to afford those. Now, what you'd do in normal times is you'd raise the interest rates higher than inflation. And over time, that would start pushing that down. Now, this is slightly different, this inflation, because it's caused by printing money, which the people didn't do. It's also caused by the war in Ukraine, which we can't control either. And so you're not necessarily going to get that effect that you normally would by smashing the rates up. Now, what also is difficult is it's a fine balancing act because the government owe trillions and trillions and trillions of pounds. And if we whack the interest rates up to 12%, they'd default and wouldn't be able to pay their bills. And that's a problem too. So what I think will happen with inflation is in 2023, I think this will start to come down. We're seeing energy costs start to come down. But I still think by the end of 2023, it's going to be high. And I predict that it will get to around 4.5%. Right? So let's see. Maybe I'm right, maybe I'm wrong. This video will be interesting. Comment below on each point. What do you think inflation is going to get to? Now, next is interest rates. And these are going to determine house prices probably more than anything else. And so it's been alarming in the last few months because we had the mini budget. And in the mini budget, no one had faith in the government, hence changing Prime Minister. And at one point, they thought the base rate was going to go to 6.5%, and we would pay about 2% on top of that, which is insane. We'd be paying close to 9–10% for some mortgages, which isn't good. And so right now we have a base rate of 3%. It's expected to go to 3.5% in December. And I think by the end of 2023, we will be at 4.5%. That's what the market is really indicating that we're going to get to. Now, if you look at Money Supermarket now and look at what deals you've got on mortgages, that means that you're probably, there's deals out there at the moment that are about 1.25% above the base rate. Now, you can get 1.25% above 4.5%, means you're going to pay around 5.756% for your interest rate. So that's something to factor in, isn't it, on where we're going to get to. Now, house prices, that's what you want to know about, really, I'm sure, right? And so where do I feel house prices are going to go? Well, we've already had 2 consecutive monthly drops in house prices this year. And so I think we're going to have some months where we get some big drops. And I think you'll have a few months where you might get 3% in a month. And that's going to worry a lot of people. But ultimately, I think house prices will drop next year because the drops that we've got now, so the November drop, that is off data way before the budget, right? Way before the mini budget. Those were people that were agreeing deals in the summer, right? We've got about a 5 to 6 months lag in the data. So I predict that we will have a house price drop through the year of 12%. I think that's where we're going to get. So if you add on what we've already got, that means that house prices in total will have gone down around about 15%. That's where I'm feeling things are going to go now. So that is something to be really diligent of. And so when you're doing deals, which I fully encourage you to still buy in the market and still be looking for deals, because a lot of people will make more money buying in a down market than at any other time. You want to buy stuff when it's on sale, right? And so what you need to do is just make sure the numbers stack up. The interest rate that you get, does that mean that it's affordable? Is the cash flow good? Maybe rents are going to rise a little bit more. So let's talk about rent increases. So I think that, so this is the interest rates. That's inflation. That's house prices and rents. I think they're still going to rise. And so there's a reason for that. And the reason that I think they're still going to rise is so many landlords are leaving the market and they're being pushed out by Section 24, which is the personal tax. I'm going to do a video on that next, actually, about what is Section 24, the implications for you as a landlord and stuff like that. I'll make that today and you'll get that online in the next few days. But what is Section 24? How does it impact you as a landlord? That's important to know. What it means is, in a nutshell, is that you pay more tax as a landlord. It's not very tax efficient to own a property in your personal name. And that's been the case for a little while now. And so those landlords are going to sell up. That means there'll be less rental stock. That means the market will go up. I think rents for the year will go up around 5%. So I think 5% rental growth for a year is realistic to what we're going to see. So what could you be doing in 2023 as an investor? Well, I think there's a lot of opportunity. I think that if you go out and look for deals, people that are distressed sellers that need to sell fast, you could get some absolutely killer deals in 2023. It doesn't matter if the market has bottomed out, because what really matters is that you find a good deal, you buy it and you hold it. You should be looking for deals where you can add value to the property. So if it's somewhere that's run down slightly, that you could paint it, fix it up, new carpets, new kitchens, new bathrooms. These are the deals that are going to be really, really good in the market. So like my deal that I bought for my daughter, Georgia, up in Doncaster, we bought for 60 grand. We spent 12 doing it up. Following that, we got revalued at 100 grand. So we created 25 grand in equity. You're still going to be able to do those kind of deals in the market. That deal that we got was strong, but there are better deals out there in any market. And so you need to learn how to find these good deals, get educated, and make sure that you take advantage of the discount prices that you're going to see in 2023. So let's just recap on this. I think inflation is going to drop by the end of 2023. I think it's still going to be high. I think it's going to be around 4.5%, way better than it is now, but still higher than the government's target of 2%. I think the interest rates are going to go up. I think 3.5% is likely in December next week. But I think by the end of the year, we're going to have some smaller interest rate rises, because they're going to start seeing the inflation go down. They're seeing what they're doing is having a positive effect on inflation. So I think by the end of the year, the base rate will be 4.5%. That's what the market's saying. And that's what I believe is true as well. I don't think we're going to get to that 6.5% unless something seriously goes wrong, and that could happen, right? So do comment what you think on that. House prices, we've already had about 3% drop this year so far. I think that we're going to drop 12%, meaning roughly that we'll have dropped around 15-16% by the end of 2023. I think then we're going to be looking at the end of this cycle as well. So the property crash in 2008 was around 16 months. We've had 2 months so far. Potentially that indicates us if we have a similar scenario of around 14 months still to go, but that might be a bit longer, it might be a bit shorter. No one knows for sure. But I think rents are really going to keep struggling. This isn't great for us as landlords either, rents rising so fast, but I think there's going to be at least a 5% increase just because more landlords are leaving the market. And that means it's going to be harder for people as well that are renting those properties. So let me know all your thoughts on all of this. What are your predictions for 2023? I'd love to know in the comments. Do like this video, guys. As I said, that helps me with YouTube. Subscribe, hit the bell, check out all the other content on my channel, including this video right here. Bye for now.